Okay, I want you to do me a favor. I want everyone to stop hoping and start trusting. Trust the games will stop. That's what we need to start doing. No more hope, just trust. What do I mean by this? Let's take a look. So, what we know about GameStop so far. And actually, to make this presentation fully tit-jacking, I must include morphing. So trust the games will stop. So anyways, what we know about GameStop so far. We're creating a marketplace, right? On the F2 likely network. You know what? Let's add characters too. Oh yeah, give me that. So we know that loop ring is a ZK rollup, which is meant for layer 2 for trading and payment, correct? Yes, no, just follow along. We're going to talk about the tokenization of assets or decentralized finance. Basically, in today's digital and globalized world, companies such as financial institutions are experiencing a strong pressure on cost reduction and business optimization. Therefore, businesses try to explore digital solutions to create new revenue streams and optimize existing legacy systems with the support of emerging technologies. While some digital solutions can simply be adopted by businesses and existing regulatory frameworks, others require a deeper understanding of the underlying technology itself and implications associated with them. The tokenization process marks a promising solution in converting rights to an asset into a unique digital representation, a token. The benefits of tokenizing assets are manifold. We have four major benefits. Number one, and just follow along. Operational efficiency. By streamlining IT systems, sharing the infrastructure between all participants and without requiring the involvement of a central third party or a broker, transaction costs are significantly reduced. The digitalization and automation of manual work, along with the reduction of a part of the reconciliation or compliance work, also enable to cut inefficiencies. In addition, simple send and receive transaction settlement and clearance can be automated and allow fast transactions of down to seconds, where traditionally hours or days were required. Next, we get assets fractionality, which by allowing to fractionalize assets and to own and perform actions over only a portion of an asset, DLT/blockchain enables a greater liquidity. By cutting down barriers to investment, a wider range of people can buy and invest in assets. In traditionally rather illiquid markets, this technology can help sellers to find more easily a counterpart to perform a transaction. Fractioning assets also introduces the notion of shared ownership, where multiple people can buy together an asset and use it, which is key in a society where usage is more and more supplementing ownership. For instance, people can buy together a holiday house and decide between themselves who will use it which week. Yippee. Next, we have transparency. Now, for physical assets, this transparency allows to an improved traceability and to provide trust over the provenance and origin by allowing any user to review the whole history of activities performed over the asset, something we do not get now in the financial markets. So let's just pause and just take a step back. So already, we have faster transactions and settlement. We have more incentive of ownership with fractionalizing the assets, which also improves liquidity. For physical assets, it also creates trust and allows to know of the origin and identify all transactions that have happened. This is literally erasing every problem that we see in the market so far. And then on top of that, we have a single source of truth for extended ecosystems. In the past and current world, corporates obtain a significant amount of data for each asset, but it appears to be constantly challenging to map and interlink data points such as intellectual properties, rights, licenses, ownership to individual products. Thereby, mostly fragmented data points are accessible. These fragmentation makes it economically unmanageable and generates avoidable efforts, avoidable efforts. So basically, it's solid, right? They can't scrape our data. Not as easily, anyway. So we take all these four things, and this is where it gets crazy. You put your thinking cap on. This is where it gets crazy. So, in essence, we have eliminate banks and custodians, we have more liquidity, we have trusted buyers, and we have proof of ownership. This is where it gets crazy. This is what we've been doing this whole year. If you think about it, the quote-unquote apes, or as I like to call us, investors in GameStop, because we know GameStop's going to be the way, we eliminated what problems? The trusted buyers and the proof of ownership. Why? Because we voted all of our shares in this year, at least I did, to the shareholder meeting. We got results of 0 broker dealers. We have trusted buyers because, again, we are investors in GameStop of the company. We own the float. The most trusted buyers you could possibly have. So what other two things are left on the table to be completed? More liquidity and eliminate banks and custodians. Well, how could that possibly happen? Loop ring. ZK rollup layer 2 for trading and payment. What did we just hear about proof of work? It's essential for crypto development. So we've been the proof of work this entire time. We've been the proof of work for the NFT marketplace, and Loop Ring is going to be the bridge to get us there, in my opinion. This is exactly what proof of work is. Trusted buyers, a trust network that we're all going to convert over to proof of stake and ride into the sunset together. Yippee. But as individuals. So, yeah. Change the game, right? I mean, it's been here this whole year. 741 this whole year. This is it. We're the proof of work. Always have been. Damn, I'm baked.